There is a specific reason why the mainstream financial media has been terrified to cover what happened in the markets over the last 12 hours. They will tell you it is just volatility. They will tell you it is just a speculative bubble. But if you look at the raw data coming out of the Asian markets and the sudden freeze in the Comex vaults this morning, you realize we are not looking at a bubble. We are looking at a break in the system. For the first time in history, silver has shattered the $90 ceiling, but the price is actually the least important part of this story. The real story is who is buying it and, more importantly, who has stopped selling it. There is a specific document, a confidential ledger from a major bullion bank that was leaked just hours ago, which explains exactly why this price explosion is happening right now. It reveals a critical shortage that the government does not want you to know about until it is too late. What is in that document changes everything about your savings, your retirement, and the US dollar in your pocket. I will show you exactly what that document says and why it signals the end of an era later in this video. But first, we need to understand the magnitude of what just happened. Welcome to the new reality. To understand why silver hitting $90 is a mathematical impossibility under normal circumstances, you have to look at the history of suppression. For 40 years, the price of silver was not determined by supply and demand, it was determined by paper contracts. It was determined by high-frequency trading algorithms designed to keep the price low to support the US dollar. When silver rises, the dollar looks weak. It's an inverse relationship. So when you see silver move from $70 to $90 in a single trading session, it is not just a commodity rallying. It's the market screaming that the dollar has lost its control. We need to analyze the geopolitics behind this. This is not just retail investors buying coins. This is state-level accumulation. We have seen reports coming out of the Shanghai Gold Exchange that show physical delivery volumes have hit a record high. China is not buying paper silver. They are taking delivery. They are draining the physical metal from the West and moving it to the East. Why? Because they know what is coming for the US bond market. Let's dive deeper into the industrial angle, which is often ignored. We are currently in a war economy. Whether the government admits it or not, the defense spending bill that was just passed requires a massive amount of physical silver. Silver is in every Tomahawk missile. It is in every fighter jet. It is in the guidance systems of the new drone fleets. The Department of Defense effectively admitted last week that their strategic stockpiles are critically low. Now, connect the dots. You have China draining the supply, and you have the US military-industrial complex desperate for the same metal. This is a supply squeeze of biblical proportions. But there is a darker layer to this, the domestic situation. The Federal Reserve has been cornered. We have heard the rumors about the Justice Department looking into the Fed's balance sheet discrepancies. While nothing is official, the market hates uncertainty. The mere whisper that the Federal Reserve, the entity that prints the money, might be compromised has caused a complete loss of faith in fiat currency. Institutional investors are not stupid. They see the writing on the wall. They are exiting cash positions and moving into tangible assets. Silver at $90 is still historically cheap when you adjust for real inflation, not the CPI numbers the government feeds us. Now, let's talk about the specific mechanism that broke last night. The Comex, the primary exchange where silver is traded in New York, operates on a fractional reserve system. That means for every ounce of silver they have in the vault, they sell hundreds of paper contracts. It works fine as long as nobody asks for the real metal. But rumors are circulating that a major entity, possibly a sovereign wealth fund from the Middle East, stood for delivery yesterday. They didn't want the cash settlement. They wanted the metal, and the metal was not there. This brings me back to that leaked ledger I mentioned at the start. The information suggests that two of the largest bullion banks in the United States are currently holding a net short position that exceeds their total assets. In simple terms, they bet that silver would go down. They bet billions on it. Now that silver has hit 90, they are insolvent. They are technically bankrupt. The only reason it hasn't been announced is because the regulators are trying to figure out how to bail them out without causing a panic. But the market knows. The spike to 90 is the sound of these banks scrambling to cover their positions, buying at any price to avoid total collapse. If these banks fail, the derivative bubble bursts. We are talking about trillions of dollars in paper contracts that will become worthless overnight. The only thing that will have value is the physical asset. This is why you are seeing this panic. It's a run on the bank, but the bank is the silver market. Let's look at the charts. If you look at the 1980 high adjusted for inflation, silver should be well over $150. We are not even close to the peak yet. What we are seeing now is the fear phase. The greed phase hasn't even started. The general public is still waking up. Your neighbor doesn't know this is happening yet. When the mainstream news finally runs the headline, "Silver hits $100, that is when the retail mania begins. We are currently in the institutional accumulation phase. The smart money is front-running the public. There's also a geopolitical divergence taking place. Japan has effectively signaled they are exiting US Treasuries. We discussed this in previous analyses, but now we are seeing the effects. As Japan sells US debt, yields spike. When yields spike, the economy cracks. The Fed has to print money to buy that debt to keep the government functioning. This is yield curve control, even if they don't call it that. Printing money to buy your own debt is the textbook definition of currency debasement. Silver is simply reflecting the expansion of the money supply. It is not that silver is becoming more expensive, it is that the dollar is becoming worthless. Consider the ratio. The gold to silver ratio has dropped significantly, but historically it still has massive room to correct. Geologists tell us that for every ounce of gold in the ground, there are roughly 8 ounces of silver, yet the price difference has been 80 to 1. The market is finally correcting this geological reality. As silver closes this gap, we could see a vertical move that makes the current $90 price look like a bargain. We must also address the technological aspect. The green energy transition is non-negotiable for Western governments. Solar panels require silver, electric vehicles require silver, 5G towers require silver. We are trying to build a 21st century economy on a supply of silver that has been stagnant for a decade. Mines are not producing enough. You can't just print more silver. It takes 10 years to bring a new mine online. We are facing a structural deficit that will last for years. So what does this mean for the average American? It means the cost of living is about to detach from reality. Silver is a leading indicator. When silver moves this fast, it tells us that hyperinflation in hard assets is here. You will see this bleed into food, fuel, and housing. The $90 silver price is a warning bell. It is telling you that your savings in the bank are melting like an ice cube in the sun. The document I alluded to earlier, the one exposing the bank insolvency, essentially proves that the suppression game is over. The silver fix is broken. The manipulators have run out of physical metal to dump on the market to lower the price. They are naked short. This is a short squeeze that could rival the GameStop event. Instead of a video game store, it's the second most important commodity in the global economy. As we move forward into this week, watch the Asian markets closely. If silver opens higher in Shanghai than it closes in New York, the arbitrage will continue to drain the West. We are witnessing a transfer of wealth from those who hold paper to those who hold metal. The window to protect your purchasing power is closing. This is not financial advice, but a geopolitical reality. The system is resetting. The price of $90 is just the beginning of the discovery phase. History is being written in real time, and you are watching the collapse of the fiat illusion.